Good afternoon. Welcome to this NCUA webinar, The Pathway to Financial Wellbeing. My name is Ken Worthy. I'm the Financial Literacy and Outreach Analyst in the Office of Consumer Protection here at NCUA, and I will serve as your moderator for this webinar. Before we begin, I have some brief technical announcements to share with you. Please ensure the volume on your computer and in the webinar window is turned up. If prompted, please allow pop-ups. To view slides appropriately, change your screen resolution to 1024 by 768 or higher. If you have any trouble viewing a slide, resize the slide window by dragging the bottom right corner. If you would like to download the slide presentation, click the green resource list button located on the bottom of your webinar window. This webinar will be posted on our website for on-demand viewing in the near future. The views and opinions expressed are those of the presenters and do not reflect the official views of, nor should be considered an endorsement by, the National Credit Union Administration's Board of Directors, its management, or staff. In this webinar, we will explore how financial literacy, financial capability, and financial inclusion are three components that contribute to a person's overall financial well-being. We will highlight how credit unions are building successful financial literacy programs that are customized based on the credit union's size and membership demographics. Specifically, you will hear from two credit unions that developed and implemented effective strategies to help support their members' financial well-being. We will also provide a brief overview of NCUA and other government resources available to augment credit union efforts to support the financial well-being of credit union members. At this time, I will introduce our guest speakers. We have with us Louisa Quitman, Director of the Office of Financial Education at the U.S. Department of the Treasury in the Office of Consumer Policy. Vicki Hain, Vice President of Community Engagement at Royal Credit Union in Eau Claire, Wisconsin. And Tim Saribi, Vice President of Community Development at Freedom First Federal Credit Union in Roanoke, Virginia. I am also joined by Gail Laster, Director of NCUA's Office of Consumer Protection, Al Brantley, Acting Director of the Division of Consumer Affairs, and Laura Toder, Program Officer for the Division of Consumer Affairs in NCUA's Office of Consumer Protection. To get us started, Director Gail Laster will provide her opening remarks.
Thank you, Ken, and welcome to our audience and our guests. We appreciate your agreeing to participate in this webinar and sharing not only your expertise of the financial literacy area, but also important tips and tools for our enhancing financial education initiatives. Now, as we all know, under the Federal Credit Union Act, promoting financial literacy is a core credit union mission. And while credit unions serve the needs of their members and promote financial literacy within the communities they serve, NCUA works to reinforce these efforts, raise consumer awareness, and increase access to credit union services. NCUA also participates in the National Financial Literacy Initiatives, including the Financial Literacy and Education Commission, an interagency group created by Congress to improve the nation's financial literacy. And Louisa, who is with us here today, coordinates the Commission's activity, and we'll talk more about its work later in this webinar. Now, before we hear from our guests, I would like to briefly discuss the connection between financial literacy, financial capability, access to affordable financial services, and financial well-being. Now, there's a growing consensus that the best way to measure the success of financial literacy efforts is to determine whether there is meaningful improvement to an individual's financial well-being. So you may be asking yourself, what exactly do we mean when we refer to financial well-being? Now, from a consumer perspective, financial well-being has four broad characteristics. First, consumers feel in control of their day-to-day and month-to-month finances. Also, they have the capacity to absorb a financial shock or emergency. Third, they are able to stay on track to meet financial goals. And fourth, they have the financial freedom to make choices to enjoy life. And so in addition to financial literacy, consumers need the attitudes, skills, and self-confidence to make smart money management decisions that best fit their life circumstances. And they also need access to affordable financial services. Now, we should all know that April is Financial Literacy Month, and so it presents an ideal time for credit unions to emphasize financial education and empower their members to live financially stable and healthy lives. Indeed, credit unions are already putting their members on the pathways to financial well-being. Many credit unions start by offering financial education at an early age through experiential learning opportunities such as youth savings accounts, in-school credit branches, and financial reality fairs, in-school credit union branches and financial reality fairs. These programs help to develop positive financial habits in children and young people that can strongly affect their long-term financial well-being. Now, many credit unions continue this work by delivering a combination of the right financial product with the right guidance as the member ages into other life stages. For example, when a consumer is ready to finance their first vehicle or home, credit unions often provide affordable auto and mortgage loan options with financial counseling. Not only will these types of engagement help your members make better informed financial decisions, but it also strengthens your credit union's relationship with its members. And this will ultimately contribute to your credit union's bottom line because an informed, financially capable member is able to fully utilize the array of products and services that your credit union offers. So, another component of financial well-being is financial inclusion, and by that we mean access to affordable financial services. This is an essential step to helping consumers build financial security and improving long-term financial outcomes. Now, low-income, underserved, and unbanked consumers are especially vulnerable to exclusion from basic and traditional financial services, including access to affordable credit. But credit unions are uniquely positioned to help underserved and unbanked individuals. And at the end of 2015, 2,297 credit unions had NCUA's low-income designation, and many times these credit unions are the only federally insured depository institutions serving low-income and economically distressed communities. Low-income credit unions offer a wide array of loan and deposit products and services to support these communities, as well as different types of credit counseling and financial education classes. Now, to support credit unions' financial inclusion efforts, NCUA and the Treasury Department recently signed an agreement that will streamline the application process for low-income designated credit unions to become certified as community development financial institutions. Credit unions that obtain CDFI certification have access to grants and other financial resources that allow them to develop unique products and services to meet the needs of low-income members. And indeed, some of our guest speakers today will provide additional insight about how CDFI resources help support financial inclusion. So thanks, Ken.
Thank you, Gail. And now we welcome our first speaker, Louisa Quitman, Director of the Office of Financial Education at the U.S. Department of the Treasury in the Office of Consumer Policy. NCUA works closely with Treasury and the Financial Literacy and Education Commission to support ongoing efforts to improve financial well-being in the United States. We are happy that Louisa could be here to discuss federal financial inclusion efforts and to provide an overview of national resources that are available to credit unions.
Thank you. Thank you for inviting me to join you today and be part of this very productive conversation. So I'll just talk a little bit about why we're concerned with financial inclusion at the Treasury Department, and then really talk more about some resources that credit unions can use to promote financial education, financial capability, and financial inclusion in their communities. Just real briefly, at the Treasury Department, we realize that there's nearly 10 million households in the U.S. that are not connected to a bank or credit union, and millions more that are routinely using alternative financial service providers to meet their needs. And I think Gail very clearly defined what those needs are. We think it's important that financial inclusion can really address the needs of these populations by building financial capability for making financial decisions over the lifetime, providing tools and resources to help people manage economic shocks and build their resiliency, and to make available good financial products that create a virtuous asset building cycle rather than one that saps income, assets, and wealth. Just to talk a little bit about the CDFI Fund resources for credit unions, the Community Development Financial Institutions Fund, or CDFI Fund, has the mission of increasing economic opportunity and promoting community development investments for underserved populations and in distressed communities in the United States. And out of over 1,000 total certified CDFIs, more than 20%, or 270, are credit unions. And there's a financial assistance and technical assistance program available to provide grants and other forms of funding to provide, to expand the services and build the capacity of CDFIs. You should know that in the 2017 budget, the President has proposed expanding funding for the CDFI Fund, including a new $10 million loan fund for small dollar loans. And as Gail mentioned, the Treasury Department is working with the National Credit Union Administration to double the number of certified CDFI credit unions. We will also be working to promote the use of the CDFI Fund programs for financial services and financial education and to build financial inclusion. The CDFI Fund is working to revamp its 2017 application to encourage more requests from organizations that focus on financial inclusion and raise awareness that CDFIs can partner with retail financial institutions to offer services. Such partnerships may enable CDFIs to deliver more innovative technology-based products in the communities where they are needed. Beyond the resources of the CDFI Fund, Ken mentioned, and Gail mentioned as well, that the Treasury Department chairs the Financial Literacy and Education Commission, which is comprised of 22 federal agencies from across the government, including the NCUA and other regulators, with the goal of coordinating financial education activities. The FLEC, as we call it, supports the mymoney.gov website, which contains free financial education resources from across the government on a range of topics and for a range of populations. And the mymoney.gov website also contains the FLEC Research and Data Clearinghouse. And the FLEC has really focused in recent years on the idea that it's best to start young and continue to provide financial education across the life cycle, but certainly to reach people in their families, their schools, and their communities in both learning key financial concepts and gaining hands-on experience. You'll see on the slide a list of financial education resources from the FLEC, particularly focused on children and youth and on post-secondary education and making those important choices about higher education. You will see again that the mymoney.gov website provides resources. Beyond these resources, the FLEC has also been working to coordinate across agency programs. And to just give an example, the FLEC realizes that a young person's first job, even a summer job, is a great time to make sure they build their financial skills and habits that they'll need across their lives. And so we have been working with the Department of Labor and their funded workforce programs to connect those workforce programs to both high-quality financial education and safe transaction products for young people. That's a great opportunity for credit unions to engage in reaching the next generation of young people and connecting them to financial education and high-quality financial products. Finally, the Treasury Department has developed a new product to fill a gap for retirement savings, which you may know is a very large gap, especially for people who don't have access to workplace retirement savings. We've created a MyRA product, which is meant to be simple, safe, and affordable way to help people start to save for their future. It's essentially a Roth IRA that is set up through automatic contributions from a paycheck, from direct deposit, or even at tax time. And the account is portable for the individual, so if they change jobs, the account stays with them. There's no risk of losing money because the investment is invested in Treasury securities and backed by the U.S. Treasury. The account earns a rate of interest commensurate with that. And the account is free to open and has no minimum fees, and individuals can contribute whatever amount they like on a regular basis and starting with that. So the MyRA product there's more information on myra.gov about the product if you're interested in making that available in your community. I'll just conclude by reiterating that credit unions have an important role to play in financial inclusion. They can build financial capability by making decisions over the lifetime. They can provide tools and resources to people in their communities to help them manage economic shocks and build economic resilience. And they can make available good financial products that create a virtuous asset building cycle rather than one that saps income, assets, and wealth. We have a number of resources available, and I know you'll hear more about resources available from the NCUA, but you can see the mymoney.gov resources on financial education resources. The CDFI Fund programs can be found at cdfifund.gov, and you can learn more about MyRA at myra.gov. And I'll just end by reminding you that April is National Financial Capability Month, so now is a great time to get started. Thanks.
Thank you, Louisa. We will now transition to our credit union representatives. First, we will hear from Ms. Vicki Hain, Vice President of Community Engagement at Royal Credit Union. Ms. Hain will focus on her credit union's youth financial literacy initiatives. As Gail mentioned earlier, these activities provide experiential learning opportunities for youth that help contribute to long-term financial well-being. Ms. Hain, thank you for being with us. Would you provide a brief overview of your credit union's youth financial literacy efforts?
Certainly. Thank you, and hello. First, let me share a little bit about our credit union. Royal Credit Union was formed in 1964 for the employees and families of the local Uniroyal plant. Today, we are community chartered with $1.6 billion in assets. We have 24 offices and serve 160,000 members. Our field of membership is 18 counties in western Wisconsin and 12 counties in eastern Minnesota, including the Twin City Metro. As indicated, I'm going to talk about our school site program. We call it School Sense. Royal Credit Union's program began years ago when a parent read an article in a Good Housekeeping magazine, and it talked about this program called Save for America. The parent approached their school's principal with it, and the program itself then was designed to just say, reach out to a financial institution, have them fund your program, and use your PTO parents to run the program. The principal contacted Royal Credit Union since we had an office about a block away. That was 1992, and I was fortunate enough to be the one that was contacted, and a few short months later, our program was launched. But we didn't want it to be just about savings. We wanted it to be an authentic learning experience, so we decided that the student should run it, not the PTO. And we treated it like a branch, and we hired the team. We incorporated job applications, interviews, and we trained the students at our facility just like any Royal team member is trained. They learned about confidentiality, handling money, and how to do the transactions on the computer system. Our school sites are connected to our network, and all the transactions are conducted live. We do, however, have adult mentors standing by to help the students with cash counting and the data entry. The whole process from start to finish is very important and a great learning experience for the applicants, whether they get the job or not. So here we are 20 years later, and our program has 28 school site locations. We have 6 in high schools, 5 in middle schools, and 17 in elementary schools. We have 350 student team members annually, 18 of which work in our high school program and are trained and hired as regular team members. They also work evenings and weekends at our full-service branch locations. We have 6 staff members who work exclusively for this program. 2 are full-time and 4 are part-time. And this is our core team that run the majority of our schools. But because of the footprint of our credit union is pretty large, we do have some of our schools that are more than an hour away from our corporate location. So in those instances, we have branch team members in those communities work the schools. And this is really important because they know their community, they have kids in the schools, they know the faculty, and they can help build the relationships in those communities as well. So why do we do it? Well, it's our core purpose at Royal to create a positive impact on the lives we touch. And this program, like's been said already, offers students hands-on experiential learning opportunities, and we put our core business right in the school. And the goal of our program is to provide financial capabilities to the students and help prepare them for the future. In fact, a couple years ago, to help validate our program, we participated in a national study sponsored by the U.S. Treasury Department. It was called Assessing Financial Capability Outcomes Youth Pilot. The study was to research the effectiveness of the strategies used to teach money and money management to students. And we really wanted to participate in this study for a couple reasons. First, this was a great opportunity for us to bring financial education into the classroom. With our program, we offer a number of classroom presentations, but it's a hit or miss since we are invited by the teachers if it fits in their curricula. We never get to teach all the students, and the fact that this study included every single 4th and 5th grade student in the Eau Claire area student district was going to receive this curriculum was very important and exciting to us. The study, however, though, was structured that several classes would be control groups that didn't get the financial instruction, but we, as a credit union, to do the right thing, decided at the beginning and promised the school district that after the study was over, we'd come back in and give those classrooms that didn't get the education the same opportunity to learn. And secondly, we wanted to participate for the facts. As you all know, it's an investment for financial institutions to operate these Save at School programs, and our hope was that the research would show that these programs, coupled with in-classroom education, help children become more financially literate. You see, every time we're asked to open up a new site, we first have to get approval from our executive team and our board of directors. And obviously, they've been wonderfully supported because we have 28 sites. But just imagine how much stronger our proposals are if we had the research to prove that these programs work. And lastly, this was a great opportunity for staff development. We had over 20 team members from Royal take part in some way over the course of the 2-year study. Our compliance, IT, marketing, and of course our education team. We started out by hosting the curriculum training for the teachers at our corporate center, but not all teachers at the end were really comfortable teaching this subject, which in and of itself is kind of sad. But out of that, 10 of our team members got the opportunity to teach this 5 weeks course in the school. And then, of course, we went back in and did the classroom instruction for all the control group classes. But the connections that we made with the students in the classrooms were real, and it was very powerful to witness their financial awareness grow. These students were so excited to tell us about their progress each week. Many would tell us that they talked about their savings plan with their mom, their dad, or their grown-up at home. It was a very meaningful process for all of us, and we're very proud to take place in this research. But the conclusion of the research was that education is key, and having the capability and access to the financial in the school really facilitated account ownership and knowledge retention. And for your information, the results of this study are publicly available. We have a link to it on our website, which is rcu.org. It's under our Investment and Savings tab and then under RCU School Sense. Or you can find it as well on treasury.com. So how do we do it? Well, there's lots of internal cooperation from our board, our executive team, multiple departments within the credit union, like IT and marketing and operations. And as you know, these ventures are not money makers, but it's easy to sell this to your board and executive team because of the financial education component, along with the collaboration and the relationships that are built with the schools. And speaking of the schools, their support is huge. Our program is a mature program. We've been doing it, like I said, for over 20 years. And our success with the first one was key since the growth has happened organically. We don't approach schools or go out and sell the program. Schools approach us. Principals are on board and supportive. And key to the program is that dedicated school liaison, someone with more time and a true champion for the program, because they help us weed through the applications. Some of our schools, we get 50 to 70 applications for 12 positions. And then they participate in the interviews, and then they schedule the students to make sure they know when they work. And of course, as you can see from the picture, we provide these really fun tie-dye shirts for the kids along with name tags, and they wear it proudly. Internships are also key. Most of our successful high schools have formal internship programs, and the workers are enrolled in those programs, and then we get them from there. It gives it structure, it creates partnerships between the credit union and the school, and it really helps justify, again, having a business in the school. And we strongly recommend to talk to the school early, get them to get their school district and their school board involved about opening a school-based financial institution. With every community we've gone into, we've received some pushback about why a school district would allow a business in the school, but we've worked it out. Again, it's about that financial literacy, and the study, again, has really helped us to provide the facts. And when we're working with new schools interested in opening, one of the things we recommend is that they go through an RFP or a request for proposal process. It makes things cleaner, it sets clear expectations for both sides. And we require a signed agreement, especially if we're going into a high school, because we usually start some construction there. And because of that, we like to have a 3-year commitment on the RFP as well. And then as far as the account, which was talked about earlier, that having an account available is very important. Our account for the students are opened in the child's name as the primary owner. We put the parent or the guardian as joint. Then the child knows it's there. Their name comes up first. They take pride in it. And for the students that join our program, we have a $5 minimum requirement to open. We put that into the account for them so that it's affordable for all students. We also provide them a stamp card with 12 stamps on it, and the students get a stamp for every deposit or withdrawal, and we do allow withdrawals, but they have to have a parent signature. And the deposits can be anywhere from a penny on up. We don't care. But they get 4 stamps, they can get a prize. And then if they wait for 8 stamps, they get even a bigger prize. And with 12 stamps, even bigger. So we're really trying to teach them that sometimes it takes longer to get what you want and you have to save. And since the schools are key to the success, we also have an incentive program for the school. So for every 500 transactions, less for smaller schools, we present the school with a check for $250 that they can use however they deem important. One thing to note, though, at the end of the school year, we carry over any transactions to the next year. So if they were at 490, we would carry that over to the next year, and so they get a check almost right away. Next slide, please. So a quick rundown on our numbers. The high school program has been a nice hiring avenue for us. Out of the 102 interns over the past 12 years, we've kept over 25 of them working on over the summer to help our branches during our busy vacation season. We have 10 current team members who came through our high school program, including our compliance auditor, our tellers, and some account reps. One of our current financial education representatives who actually works in the school was part of our elementary program many years ago. And just a month ago, I hired a UW intern from Eau Claire who told me at our interview that she was one of our team members in 5th grade, which was really exciting. And as you can see from the slide, we've hired over 3,000 students during our 22 years. And from the transaction side, which isn't why we do it other than trying to get kids in the habit of savings, we completed 17,000 transactions for nearly $530,000 in deposits in our program. Though we certainly don't do our program to receive awards, you can see on this slide that it's a great source of pride for us. We were named the 2015 Community Credit Union of the Year this year, and a big part of our story was centered around our financial literacy activities, including our School Sense program. But the biggest impact is the better educated future consumers who know the importance of savings. Next slide, please. But our program, again, isn't all about the savings. It's also important to get into the classrooms and in front of those organizations and groups and teach financial literacy. Our school site program has been a valuable tool for us to make those connections, build those relationships, and expand our capacity to reach many levels of students, parents, and individuals with these educational opportunities. We've had the opportunity to connect through the Boys and Girls Club with those students that don't attend one of our school sites. And then we've been invited to the county jail to talk to some incarcerated women to help them tackle their finances and give them a better chance once they're released. Having a school site program has really been key to all of these successes for us. And if I can answer anyone's questions afterwards, I'd be happy to. But thank you very much for this opportunity.
Thank you, Ms. Hain. Just a quick clarification. The Treasury site is actually treasury.gov for information on the study that you mentioned, in addition to the Royal Credit Union site. Now we will transition to questions. Al Brantley, Acting Director of the Division of Consumer Affairs in the Office of Consumer Protection, has some follow-up questions for you.
Thank you, Ken. Ms. Hain, how do your efforts go beyond financial literacy, such as offering life cycle products and services, and fostering member retention?
Well, we have a couple products that we've developed a few years ago. Our main checking account is called Smart Checking. But we have a Smart Start checking account, and with that checking account, we have an Oops NSF forgiveness. So as students and people under the age of 25 is who it's geared towards, write checks and bounce them, we forgive them at least 2 times per year, and then we provide them with tools and direct them to our website to say that, there's balancing opportunities and there's some educational tools there. And then we also try to get them to set up auto transfers so that they don't get NSFs from their accounts. And we do have overdraft protection as well, and we don't have any fees or transfer fees with any of those. Our accounts are basically no-fee accounts. And then with that 25 and under crowd, we have interns at all the university campuses that go into classrooms and do education. They sit at the classrooms, outside of the classrooms. They do Facebook posts and tweets and lots of education to that particular demographic as well.
Is your program scalable? Would a smaller size credit union, perhaps with limited resources, be able to offer this program or a variation of the program?
Oh, definitely. You know, I think the largest expense for our program is our staff time and the commitment to that resource. And, you know, we're in lots of schools, and we're doing a lot of twice a week with the high schools, 5 times a week with one of our high schools. I mean, you could do every other week. You could do, once a month if you wanted to. I think you could cut back and do it less often. The other cost of the program is really those incentive prizes, but you can use any local or online vendor to purchase very inexpensive prizes. You know, the kids are really easy to please, so I don't think you have to spend a lot of money. And then the incentive to the school, I mean, we have some schools that, get $1,000 or more a year with their transactions, but others that only get $250. And you certainly don't have to do that part of the program. We just felt we got better buy-in from the schools when we were rewarding them with it as well.
What role, then, can your state or federal regulator play in supporting your financial literacy programs?
Well, every time we open up one of our school sites, we do have to get our approval from the Department of Financial Institutions. So, of course, continued support of that is important for us. So we definitely want that to stay in place. And we're provided with a lot of resources and support from our federal agencies. I would love to see that continue. I would not want to see that drop at all. So providing those resources and support, I think, is key.
Thank you, Ms. Hain, for sharing the success of your youth financial literacy program and emphasizing the importance of providing financial learning opportunities for youth at an early age. We certainly appreciate your feedback on these important objectives. Now, Ken, back to you.
Thank you, Al. Our next speaker, Mr. Tim Cerebri, Vice President of Community Development at Freedom First Federal Credit Union, will discuss some innovative programs that combine access to affordable credit for underserved and unbanked consumers with financial literacy. Also, similar to how Ms. Hain at Royal Credit Union worked with schools as their local partner, Mr. Cerebri will discuss how its credit union works with community partners to achieve its financial literacy and financial inclusion mission. Mr. Cerebri, thank you for adding to this important discussion. Would you mind providing an overview of your program?
Thank you so much, Ken. Very happy to be here, part of this conversation. So a little bit of background on Freedom First Credit Union. We are located in Southwest Virginia, Roanoke, Virginia, to be specific. We were chartered in 1956. Actually started off as an employer-based credit union with GE. We are now a community charter serving a 5-county area. Currently have a little bit over 46,000 members and a little bit over $400 million in assets. We are a CDFI and low-income designated credit union. And just to give you a little overview on our financial education programming, we do offer group sessions, one-on-one counseling. We do have a full-time community educator on staff. Currently, our staff, we have 4 FICEP certified financial counselors, and 3 more are currently being certified. Over the past 2 years, 2014 and 2015, we completed over 508 sessions, reaching a little bit over 3,354 participants. And at Freedom First, we really see financial education and financial literacy as extremely important components to households being able to achieve that financial well-being, and we incorporate them into many of our programs. 2 of those programs, we mentioned Responsible Rides. Responsible Rides is a affordable car ownership program for low to moderate income earners, which includes education classes on finances, budgeting, as well as car maintenance. Now, that partnership actually started between ourselves and a local action agency called TAP, Total Action for Progress. and now includes 3 local action agencies and some hand-picked local car dealerships. Our community is largely rural, and we have been able to identify transportation as a major hurdle for many of the low and moderate income households in our communities. That program, we do have a full-time in-house responsible rides coordinator. Having that coordinator really allows us to take a holistic approach, because we know that transportation is often just one of the challenges for the households that we get in front of. We do require, as part of that program, before the individual can get their car loan and get that new vehicle, we do require financial education, which includes a group session. We cover vehicle maintenance as part of that. We have some great local partners here from Goodyear and Firestone. They come in and volunteer their time to teach the vehicle maintenance portion of that. We also require a one-on-one session with our financial educator. And for that program in 2014 and 2015, we were able to get 165 individuals into reliable transportation through the program. Now, another program that we incorporate financial education and financial literacy into is our workforce development program. Several years ago, we identified another key area in our community that we really wanted to help with. Unemployment is slightly lower than the national average here if you look at all 5 of our counties, but inside our Roanoke City limits, it's actually higher than the national average. Many area experts have identified this as a skills mismatch issue more than just a lack of available jobs. And we were able to identify and understand that many certificate and even certification programs for workforce development do not qualify for traditional financial aid, mainly because they are not part of a degree program. So for individuals that are looking to pursue these type of programs, they really have some limited funding options, which is why we created our workforce development loan program. It began a few years ago as a partnership with one of our local community colleges and a local truck driving school called CDS. The CDS partnership has been very, very successful. They do a great job. They screen applicants and they send us individuals that need financing. Through that program that we built, we're able to provide flexible financing, which includes pushing off their first payment for as much as 60 days, which allows the students to really focus on their training. Also, in meeting with the folks over at CDS, we designed a financial education seminar to specifically address the unique challenges that come with being on the road as a truck driver. Our community educator, she teaches this 1-hour seminar with every single CDS class. And CDS, they start a new class about every 2 weeks, and we're able to provide that financial literacy effort through those classes. That program, again, has been very successful. Between 2014 and 2015, we issued 121 loans for about $464,000. Average loan size is just under $4,000, and we're currently expanding that program into other areas, including healthcare certifications, welding, and other job readiness programs as well.
Thank you, Mr. Saribi. Now we will go back over to Al Brantley with some follow-up questions for you.
Thank you, Ken. Mr. Saribi, could you take a moment to elaborate more on the national, state, or local partners you work with to reach the underserved and unbanked?
Yeah, absolutely, Al. And that's a good question, because we really, here at Freedom First, we believe our success and our ability to effectively serve our community is really dependent on having some great community partners. I mentioned some of them with the local community college, the local truck driving school, and some of our local action agencies. There's 2 other partnerships that I'm really proud of that do include the financial education and financial literacy piece as well. One, we partner with our local United Way for a Bank On program, Bank On Roanoke Valley. That program is really designed to reach the unbanked and underbanked members of our community. Research has shown us that the average unbanked individual will pay about $1,000 per year in alternative financial services, and that really equates to about $40,000 over a lifetime. So it's really important to get those individuals banked and into the financial system. We also do provide the financial literacy training for that program. Another program that we're able to participate with is a partnership with the National Federation of Community Development Credit Unions. They have a pilot program. It's the name is very similar to the name of this call. It's Pathways to Financial Empowerment, and that pilot program is designed to help low and moderate income consumers move along a pathway to financial stability and asset development through counseling combined with safe and responsible products and services. So it's really neat to be part of those programs as well.
What are some specific financial products you make available to help meet the unmet needs of the underserved and unbanked?
Yeah, I really believe that having those specific financial products is key. It's one thing to be able to provide financial literacy and financial education, for example, giving advice on how to fix damaged credit or how to establish credit. It's something completely different to be able to provide that literacy and that education, but then also have the products and services to back it up. A couple of the programs that we have here, one is a payday alternative loan. We designed that payday alternative loan to look like a payday loan, to act like a payday loan, but without the payday loan fees or interest rate. We really understand that some folks in our community are just more comfortable with the way payday loans work because that's what they're familiar with. So they're not having to get used to something new, but we're able to provide them a much more responsible financing option. We do have credit builder programs to help individuals either reestablish credit or help repair credit. And another loan program that we have is a borrow and save loan, which has the lending component but also has a savings component to it, where after that loan is paid off, the borrower does have funds that are placed into their savings account. And with that program, we're really hoping to change some behaviors and hopefully get folks a little bit more comfortable with making constant contributions to a savings account.
So how do your efforts go beyond financial literacy, such as moving your members toward more traditional financial products and services?
It really goes back to kind of what I described earlier, is having that holistic approach. It's matching that financial literacy and the education with the appropriate products and services. It's also being able to identify and address other household needs that are making it challenging to obtain that financial stability. We know that sometimes the most pressing need may be transportation, but there may be other needs as well, and we want to make sure that we're not just addressing one of those. We've got some really good success stories here of individuals that have went through multiple programs that we have. Just last year, we had a individual that was one of our original Responsible Rides participants for that car ownership program. Worked with them for several years with some ongoing counseling and education, and then they were able to take advantage of our affordable home ownership program last year as well. So a lot of really good success stories like that, but it just goes back to taking that holistic approach to the members.
Is your program scalable? Would a smaller size credit union, perhaps with limited resources, be able to offer this program or perhaps a variation of the program?
I believe so. The two programs I mentioned, I do believe they are scalable. Now, I will tell you with the Responsible Rides program, it does carry a very heavy administrative burden. These households are often very financially volatile households, but also our Responsible Rides coordinator does a really good job of establishing relationships with these members. So having that full-time Responsible Rides coordinator, I believe, is key for that program. With workforce development, I believe that's very scalable, especially if you have the right partners involved, and we've been able to identify those great partners in our local community to help with that program.
What role can your state or federal regulator play in supporting your financial literacy programs?
And that's a very good question, and I'm going to have to agree with Vicki over at Royal. I think she hit the nail on the head. Just keep providing those tools and support. We know that the financial world is ever-changing, and we ourselves, we like to consider ourselves students of financial literacy. And so those tools and support are much appreciated.
Thank you, Mr. Saribi, for sharing your financial literacy inclusion program activity and highlighting the community partners you work with. Now back over to Ken.
Thank you, Al. Before we move to our next presentation, just a quick note on the questions we are receiving. Wonderful questions. We only have time for the ones that we've asked, but we will provide the contact information for our speakers as well as NCUA at the end of this presentation. Now we will hear from Laura Toder, Program Officer for the Division of Consumer Affairs in the Office of Consumer Protection. Laura will briefly outline some of the resources available to credit unions that help support the financial well-being of consumers.
Thank you, Ken. NCUA's consumer website, mycreditunion.gov, and microsite PocketSense provide consumers with timely and practical financial tips, interactive learning tools, and financial calculators. Content on these sites is organized to provide information and resources to consumers at various stages during their lifetime as they prepare for various life events. For example, your members can find helpful information on such topics as how to start saving, paying off debt, reading a credit card statement, and understanding what is contained in financial disclosures and loan applications. NCUA's educational content is available in multiple formats, including web articles, downloadable brochures, videos, interactive learning tools, and social media. The NCUA Consumer Report video series is available on NCUA's YouTube channel. The videos provide information on a variety of current topics, such as how share insurance coverage works, avoiding frauds and scams, and understanding payday loans in a short, consumer-friendly format. NCUA also provides a calendar of annual financial literacy events, topics, and opportunities that credit can promote and participate in throughout the year. This calendar is regularly updated with new information. To help support financial literacy outreach and awareness efforts, NCUA hosts Twitter chats with consumers and credit unions on various annual financial literacy events, such as those listed on the calendar. Credit unions are encouraged to join these chats to share ideas, offer financial literacy expertise, and encourage member participation. Credit unions may also use mycreditunion.gov, PocketSense, the Share Insurance Estimator, and our new interactive learning tool, World of Sense, to enhance financial literacy outreach to members. Some examples of how credit unions can use NCUA's resources include displaying a link or graphic of mycreditunion.gov on the credit union's homepage or on brochures, flyers, and in-branch displays. Also, consider adding mycreditunion.gov, PocketSense, the Share Insurance Estimator, and the other NCUA products as part of your credit union's member education resources. Many of our resources, including mycreditunion.gov, PocketSense, and the Share Insurance Estimator, are also available in Spanish. Also, our consumer Twitter feed at mycugov provides daily personal finance tips and best practices for consumers. We encourage you to follow and retweet our consumer Twitter feed at mycugov to help increase awareness of important personal finance matters. And remember to visit and bookmark mycreditunion.gov and PocketSense. And one more item before I conclude. Available now on mycreditunion.gov is a new interactive infographic on what is a credit union. Feel free to use this infographic to educate consumers about how credit unions are different from other financial institutions. And finally, NCUA is available to recommend financial literacy materials to assist your credit union with providing financial education resources to schools and local organizations. You may request NCUA's assistance by sending an email to consumeraffairs@ncua.gov. Ken?
Thank you, Laura, and thank you to all our participants. Director Gail Laster will now provide some closing remarks.
Thanks, Ken. Thanks, Ken. And as you can see from our next slide, I wanted to make sure that there is a quick reminder to all of you are in the credit union land about reporting your financial education services activity through the credit union profile. As you know, with every cycle of the call report, credit unions must review and certify their credit union profile. And on the profile page, credit unions indicate whether they offer financial literacy workshops, financial counseling, financial education, in-school branches, and first-time homebuyer programs. And this data is very important, and it helps inform NCUA and other stakeholders about the important financial literacy work credit unions are doing nationwide. it is possible that credit unions are not drawing enough attention, we find, in terms of their financial education efforts. Therefore, credit unions offering such services should ensure that they are capturing this information accurately on a quarterly basis. And again, turning our attention to the slide, it indicates that as of December 31st, 2015, nearly 46%, or 2,745, of all federally insured credit unions offered financial education services. Now, I must tell you, we think that this number, frankly, is low, and people are underreporting their activities. And as I said, you really should make an effort to remember what you do, what you might consider to be customer service, what you might consider to just be good practice in terms of activities that your employees are doing in terms of helping your community. All these things really should be captured on the call report in the credit union profile. And again, looking at this slide, of these 46% of federally insured credit unions that were offering financial education services, they had total assets of $997 billion, with an average asset size of $663 million, and a combined membership base of 83.8 million. These financial education services reached approximately 82% of all credit union members. So, hope that gives you some food for thought, and I hope you indeed are continue with all your activities and just make sure that you're reporting them accurately. So, again, just to sum up, I want to thank again all of our speakers, particularly Louisa and our credit union community. I think they were really well informed. They're doing some wonderful things, and they took the time to explain what they're doing, tell you about the highs and the lows, the difficulties, because we realize it's not always easy to do good. It's not always easy to accomplish our mission, but I think you've heard from some folks who are very passionate about what they do, because that is part of the credit union way, to be passionate about serving our community and our members. So again, thank you for all of the, and thank you audience participants who took the time out of your busy day to listen to this webinar. And at this point, I'll just turn it over to Ken for information about how to contact us, because as he indicated, we recognize that you might have some questions, but we hope that through the presentations, which we thought, particularly from the credit unions, were very thorough, and that the questions that were asked and answered, and then the presentations from Louisa about resources and products, and the presentation from Laura about NCUA services, that we frankly should have addressed most, if not most of the questions. I can't say all, but if any do remain, you know that we're here for suggestions on ways, your suggestions on how we can support your financial literacy efforts, your suggestions on what you'd like to see from your federal regulators in terms of increased efforts, your accomplishments in terms of what you're doing in financial literacy. All of those things are very important to us, and we do appreciate it when you take the time to share that information with us. So, Ken, I turn it over to you for closing remarks.
Thank you, Gail. As Gail mentioned just now, on screen now is the contact information for our speakers as well as NCUA. Please feel free to take this information and follow up with any questions you may have. This concludes our webcast. Thank you to everyone for joining us. In the near future, we will announce when the archive of this webcast is available. Please visit mycreditunion.gov for updates. Thank you, and have a wonderful day. Good afternoon. Welcome to this NCOA webinar, The Pathway to Financial Wellbeing. My name is Ken Worthy. I'm the Financial Literacy and Outreach Analyst in the Office of Consumer Protection here at NCOA, and I will serve as your moderator for this webinar. Before we begin, I have some brief technical announcements to share with you. Please ensure the volume on your computer and in the webinar window is turned up. If prompted, please allow pop-ups. To view slides appropriately,